Hi everyone, hope this finds you well. So I wanted to get this video out today in regards to the latest UK house price report. This is a report that's published by Zoopla in conjunction with HomeTrack, and it really gives a great insight and a very short summary in regards to the health of the market, where things are at, what the predictions are as well. Now, there's a couple of reports they produce. The first is all in regards to growth. And the second, which I'll get over shortly, is in regards to the rental side of the market as well. Now, if you want this particular report and if you'd like this in more detail, just let your broker know and we can get this out to you, no problem at all. But the key to this is knowing about where the best cities are, where the best cities have grown over the last couple of years, and of course, potentially where to invest as well. So it gives a real key insight into that. Now, first of all, we look at the average UK house price growth year on year. So this is from March 2020 to March 2021. So we can see here we've got the house price growth of 4%. That's an average for the UK. That's the year to March 2021. And again, this is the key here. We can see the demand for property is up by 27.5% year on year. That's a huge increase. Now, another key factor for the house price drive is actually this figure here. This is the flow of new supply of properties, both apartments and houses. It's down 6.1%. The main reason for that is simply due to when we first locked down back in March 2020, when COVID first hit, then what we noticed is that the construction industry just stopped overnight. Now, they didn't really have any indication from the government about which way to go. And because of that, a lot of sites were delayed 3-4 months initially, but that then had a knock-on effect for other sites starting and cracking on. So what we're actually seeing is the remnants of that first initial lockdown. Now the construction industry is back up and running, albeit still at a slower pace, because there's still social distancing on site, still things like, whereas if one particular worker uses a drill, they then have to wipe the drill, they put it in a certain place, the next person can't pick up that drill for a certain period of time. So there's all construction protocols that they have to go through. So sites are going to be a little bit slower, but I do expect this flow of supply to change and start to get back to a bit more of an even keel over the coming year to year and a half. Now, where's the cities? This is key. Where are the cities that are actually making the best gains? As we scroll down here, we can actually see Manchester and Liverpool, cities that we promote constantly. Manchester and Liverpool retain their spots as the top of the price charts, 6.5% and 6.3% respectively. So that is key. We still think that there's great growth to be had in those areas. There's a lot of people, when Brexit initially hit, they held off the market and they held off from investing because they simply thought that Brexit's going to have an impact. It didn't. Then, of course, we had the election. They thought that was going to have an impact. It only had an impact in a positive way. They called it the Boris bounce at the time. Then, of course, we had COVID. A lot of people waited again to buy property and buy investments because they thought that would have an impact. Again, it did, but only in a positive way. And again, now we've seen that people that potentially could have invested 3 or 4 years ago probably have cost themselves 15 to 20%. So we advise everyone that is looking, those people that are looking to get in at the bottom and out of the top, that very, very rarely happens. And if it does, it's probably by luck more than judgment. So our advice is simply get in and get into those markets that are making the best gains. You're going to keep property 5-10 years at a minimum. So now's the time to take action and get involved here. So as you can see, Manchester and Liverpool up 6.5 to 6.3%. Now, demand for housing as homes have hit new highs. So you've got buyer demand for the week commencing is up 118%. So it's actually hit a brand new peak. Again, it's been buoyed by Easter and bank holidays. And because of that, people have got more time to look. And of course, lockdown's lifted so people can get out and actually have a look. But the key is this. This is the crux of the report. This is where the facts are centralized in terms of what the best cities are. And you can see the top 10 here. They're all pretty much in the north. You've got Manchester, Liverpool, Leeds, Nottingham, Leicester, Sheffield. Great cities, all giving solid gains, all well above what the UK average is making. But especially key here is sort of like your Manchester and your Liverpools. Now, a lot of people say, well, when deciding what city to invest in out of those two, the key for me is your budget and how long you're looking to hold for. If you're looking to hold for just a couple of years and your budget stretches to it, then of course you can't go wrong with Manchester. Manchester's a great city, really strong, great demand, good rental prospects. But if you're looking a bit longer term and your budget doesn't potentially quite stretch to the Manchester, then for me, Liverpool will eventually overtake Manchester as the number one city in terms of house price growth, because you can get more bang for your buck at the moment in Liverpool. And as we scroll down to the average price in the area, you can see here Manchester 185, 800 for an average, whereas Liverpool, huge saving, an average price of 130. We've got new products that are around about the 120, 130 for one beds in Liverpool, whereas Manchester at 180, 190. Again, Liverpool two beds, 170, 180. Manchester 240, 250. So big difference in terms of what your budget needs to be in those particular areas. And again, especially as they're going up pretty much like for like, my advice is that if your budget doesn't stretch, Liverpool is a fantastic option. When it comes to the rental market as well, we can click on another report by Zoopla and we can see that the rents on average have actually decreased. So rents on average in the UK have actually decreased. Now, this was a number of reasons. People haven't really been looking to move out. Potentially they went back home with family while COVID was there, so they've not been looking. Now, we obviously expect that to change, but despite that, we have still seen the northeast especially tops this particular chart of 5.2%, but you can still see the northwest is still 2.2%. That's well above what the annual change is in terms of the average. So from my point of view, again, if you would like your more detail on this report, more than happy to send this over. But the key is still looking to be the investment vehicle of the moment is property, and of course Manchester and Liverpool are the ways to go.